So welcome to another edition of Wednesday Live. As usual, we're going to start our analysis from DXY, but I would like to check if we have any major news. Let's go to Forest Factory. Forestfactory.com. Let's check if there's any major news we're expecting this week. Of course, we know we're going to expect on Wednesday, that's today, by 2. Okay, my time is wrong, sorry, but by we're going to see CPI, CHF, okay, all the OPEC. There's OPEC meeting today, so CAD, we should watch CAD for possible movement. Okay, what other news? On Thursday, we have Bank of England monetary policy report. Okay, we have MPC official bank rate, because there is inflation everywhere. It's either they leave it the same or they jack it up. That's what they can do. All right, it was okay, official cash rate, it was 1.25 before. They move it to 1.75. Okay, 1.75. The last we had of it was 1.25. No, actual 1.25. Forecast this previous 1%. Okay, so probably we're expecting 1.75 now. Let's see how it plays out. Some of these don't even have much difference now, because all of them are increasing rate at the same time. So we don't have a rate differential. We don't have much rate differential again. Okay, but we see how it plays out. All right, so we should also have this week. We should have NFP. That is on Friday. We should have NFP. What is this doing like this? Let's just explore the fundamental before any other thing. Okay, on Friday, we are going to have NFP, yes. Unemployment change, okay. Forecast. What is the forecast for the card? You've got to check all these things. Okay, the forecast is 14.2K, right? So, and the unemployment rate, the forecast is now 5%. Okay, 5%, and it was formerly 4.9%. All right, I'm going to dedicate a day to teach you that even if this value, even if it is positive, if it is green, it can still mean bearish for the chart. I'm going to teach you how to read them. Okay, non-farm payroll, we're expecting a drop of employment from 372K to 250K. That's the expectation. All right. So, and the unemployment rate remain 3.6. Okay, so these are the major news we are expecting this week. Of course, you know how. Okay, we're also expecting Reserve Bank of Australia monetary policy statement. Okay, it's also coming up on Thursday. Okay, let's wait for them, guys. Let's wait for them. You see, probably the chart will be setting up for some of these news. But let's go for our technicals now. Let's go for our technicals. Okay. Let's go for technicals. All right, so DXY. This is what tells me what to do on many entries I get. This This is the deciding factor, guys. I've told you severally that this is the trick. If I get, any week I get my forecast right on DXY, that week is going to be super profitable for me. I will make it big. Okay, if you look at this, guys, do you notice that if you check the equal leg of this particular wave, it's not equal to this one in terms of length? You notice it's not equal. Okay, and as it is not equal, it has implication. Let's measure it. From, we use a trend-based fib extension, drop it here, take it back to the end of correction. Where do you have 100 to 123% fib extension? This zone. This is the zone we expect. DXY to come. And if you notice something, guys, you notice something. We are having a corrective structure in the middle here. Okay, so I'm seeing a possibility of having an impulse, a running flat in the middle, and then 1, 2, and 3. Three-wave structure to the downside. Okay, so if we are expecting DXY to come down, then when we get to Euro US dollar, Australia dollar, Australia dollar US dollar, New Zealand dollar US dollar, if you go to all these pair, this particular analysis is going to inform our decision on how we analyze the pair. Even GBP USD, all right, USD JPY, this is what is going to help us to find out what those ones want to do. So having this in mind, that we're expecting DXY to come down, we now move to other pairs, AUD USD. Can you see what I'm saying? Now, if you look at AUD USD 4 hours time frame, you notice that I've been mentioning this structure, that I want this structure to come like this, break this top, because this level broke this low. So I want this to break this top, form an expanding flat, and drop. But it is not compulsory for it to form an expanding flat. It can also form a running flat where it will just end here and also drop. It's qualified to drop in both cases, and structurally it's correct to do so. But then what we notice in this structure is simple, guys. What we notice is simple. We are having an ending structure here, guys. I told you, when you have an impulse, this way, and you're having a crop like this, this is an ending structure that is going to break down, either as a reversal or as a three-wave corrective structure for more upside. Either this three-wave corrective structure for more upside, or an impulse, correction, and more downside, depending on where you see this ending structure. Okay, but this time around, we are seeing this ending structure at the end of a corrective structure. Where is the corrective structure? This is the corrective structure. So whatever happens, whether a running flat or an expanding flat, we want this market to come to the downside. Is that okay now? So having said that, when we check, you know, one way to confirm the existence or the authenticity of an ending structure like this is by plugging an indicator where you can get whether there is divergence or not. And you can see here why this pair keeps making a higher high and higher high. This indicator is making a lower high and lower high. That means momentum to the upside is no longer there, but rather we have a powerful momentum to the downside. Okay, that is why yesterday I actually gave a buy trade for GBP AUD. But I look at it, say, guys, what's wrong with you? You are too childish. Why do you want to catch this short move? Okay, when you know that when that short move is over, this big move is coming. I say, come on, guys, don't be childish. Close this trade. Close that trade in my signal channel in only 7 pips. I'm not interested. I can't be childish. Let it go without me, because this is probably going to be the last push to the upside. If this upside come, it will come and break this level. After breaking this level, it's going to come from this level to the downside. Yes, to the downside. That's what is going to happen. And then this move to the upside you see here will happen when DXY is breaking to the downside. Okay, the downside that I showed you in DXY before it will move upside, that is the upside you are seeing in AUD USD before it will move downside. Do you understand now? So that is the analysis on AUD USD. Leave this by, let it complete, let it break up here, and you see this ending structure, let it finish. Once it's done, it's going to break down. All right, so that is a Euro AUD USD. The same thing for NZD USD. In fact, we can even do the schematic for you on this structure. This is 1, 2, and 3. All right, this is a WXY structure, guys. This is 1, 2, and 3 in the middle. Can we see the last 1, 2, 3? Yes, 1. Corrective structure in the middle, and then 3. Simple. And then how can we confirm that this structure is going to hit this level? We need to check the connector. Where is the connector of these last 3 waves here? The last 3 waves, the first 3 waves here, and the last 3 waves here. Where is the connector? See the connector here. See the 3 waves that connect them. So what we have to do now is to find the fifth extension between this first leg, drop it here. At the end of the first 3 waves, take it back to the end of the connector, and then check between 100 to 123% fifth extension. This is the setup. All right. So right now, what we are going to do, maybe we're going to do some, let's try something. We're expecting this wave because it's quite big structurally, guys. It's quite big. We can't ignore it. All right, we can't ignore it. So let's check if we can get a setup for this particular trade. I want us to check something. That's how I trade, and that's how I do my own technical analysis. I want to plug in my indicator and see possibility of getting a hidden bullish divergence that prove the authenticity of this upside. Okay, so if I plug in my indicator, I want to check the last low. See the last low? You see the next low? I want to check the indicator. If I have a higher low here, do I have a lower low here? Can you see? Lower low. So I'm having a higher low here. I'm having a lower low here. What is the implication, guys? The implication is that I'm getting a better momentum to push to the upside at this level than we had at this level. So if that is the case, on 1 hour time frame, you see that what's this? The stochastic is right at the top. So you cannot press a buy when your stochastic is at the top. So all we have to do now, ladies and gentlemen, is I just go to 15 minutes time frame. I want to see if I can get a clean impulse and correction to 61.8. And you can see here, right here, guys, you are already having an impulse. Okay, you're having an impulse right here, but the correction, I'm not sure it has come up to 50 to 61.8. Impulse. Okay. Okay. 1, 2, and 3. This might just be enough for a move to the upside. All right, might just be enough. But guys, I love to trade at 61.8. I love to trade at 61.8. But let's check the risk. If it's not more, we're going to take it together. Can we reach 35 pips, guys? Can we reach 35 pips? Yes. You can take this trade. 35 pips risk, guys. Yes. But know for sure that we are taking it because it touched 50%. If it did not touch 50% at all, we are not going to take it for any reason, guys. But because it touched 50%, we are taking it, but we are putting stop loss at where? Below 78% fib retracement, below 78. Look at it. We are putting stop loss below 78. That is a 62.25. Okay, so now everybody, let's buy. We are taking the risk together. If you are ready to take the risk with me, let's buy NZD USD. Guys, if you are ready to take the risk with me, let's go in and buy NZD USD. Is that okay now? Okay, so we are going in for a buy of NZD USD. Okay, I think we have done that now. So you can and we are putting stop loss below here, which is 62.25, 62.25. That's why we are putting stop loss, guys. 62.25. Okay, and then we'll put TP after we break this stop. Okay, I believe we projected it that time. We put TP at around let's just put TP at let's put it at 63.50. Okay, let's put TP at 63.50, guys. 0.6350. Stop loss 0.6225. Let's go. We are risking 30 pips. Remember, don't over risk. You have to risk what you can lose. All right. So that is NZD USD, because we have projected the possibility of formation of this structure before we have a move to the downside. Is that okay now? So let's move. We are moving to the next setup now, guys. Okay, let's go to the next setup, euro dollar. Okay, euro dollar. All right, so when you come to euro dollar, of course, you see that we are expecting a move to the upside on what do we call it, on DXY. Okay, because we are expecting a move to the upside on DXY, then you are going to expect a move to the upside for euro dollar. Is that okay now? That's what we'll be expecting for euro dollar. Then we are going to analyze it together right now, guys. So now, what I was expecting before, my expectation before, is that this move to the upside is going to come down. Okay, let me remove this. I was expecting this 1, 2, and 3, 1, 2, and 3. I'm expecting 1, 2, and 3. But I'm not sure this will happen, guys. I'm not sure this will happen. The reason why I think it's not going to happen is simple. Okay, the reason why I think it's not going to happen is simple. Because DXY is ready to go down at the present level. Can you see? The structure is complete on DXY. So when we come to euro dollar, if we are still expecting it to come down, it might not happen that way. So it might be that this structure here is corrected by this structure and is starting what is called a running flat at the middle here, a running flat. upside, 1, 2, 3, and then upside. Okay, and if you make a projection using a fib extension from here to here back to this level, you can see that tentatively we're expecting it to come over to this level before we look for sell opportunity. Of course, you see that euro dollar is already setting up for the buy that we projected. Can you see? It's already setting up for that buy. Okay, it's setting up for that buy, but we have already taken NZD USD, and because we have taken NZD USD, there is no reason to take Euro USD. So just watch impulse correction and another impulse at this level at around 1.0450. Euro dollar should drop, and that time you see DXY here. DXY here at when DXY pushed to 104, around 104 or 104.5, it should make a move to the upside. And when it's making a move to the upside, we're going to sell all the majors. Okay, we're going to sell them. All right, give us a trade on NZD, on Euro AUD today. Let's look at it together. Okay, let's look at it together. I want us to sell it, although it's a buy setup. Okay, so the trade I gave you was just a small trade to just complete a structure and move to the upside, because of course nobody would deny knowledge of this particular setup, because I've given us in the group that right here the structure you are seeing before us is an impulse here, 1, 2, 3, 4, and 5. Then 1, 2, 3 in the middle. Then you need 1, 2, 3, 4, 5 here. Okay. All right. And that will be what? That will be WXY structure. WXY structure. This is what we have. Okay. So now, but when you see where the structure started, is what is giving us a correction of the initial impulse. Okay, there's already a break of market structure here. Of course, you know, every impulse to qualify as an impulse must break a market structure. Okay, and I told you severally that as soon as market structure is taken, all you need to do is just to find out where is the impulse. You know my 4 entry rule. If you don't know it, go to my YouTube channel. Just search Nathaniel Tunde, Nathaniel. That's Nathaniel Tunde, Tunde. When you search it, you see my 4 entry rule there. First is to see impulse. This is the impulse. Okay. The next is to check to be able to define the correction. Where is the correction that we want to define? 1. This has come to 50 to 61.8. Reason I call the sell. And we want it to come over down here. Where is our profit target? Now that you have already seen wave A of the correction and the wave B of the correction, this is A, this is B. We are looking for C. We are selling the C leg. So we just have to take a fib extension from this to this back to this area. Where you have 100 to 123, this is where we are expecting Euro AUD to stop. Okay, and that is why I projected 1.4600. That's about 88 pips as my profit target for Euro AUD. And if I have to be aggressive in my trading, I will give you a buy limit again at this level, because we are not just doing this on our own. We are doing it based on theoretical guideline, guys. I can give you a setup, a sell setup here. Sorry, a sell setup here, stop loss here, okay, and TP here. And at the same time, I will be giving you a buy limit here, stop loss here, and TP all the way to the upside. This is the main trade we want to catch, guys. This is the main trade. This is just by the way. This is just by the way. It's struggling because it's a corrective move. When the continuation move comes, it's not going to struggle again. It's going to move very fast. Is that okay now? All right, that is AUD USD. Euro JPY, we're going to look for buy opportunity for Euro JPY. Okay, I'm going to look for buy opportunity. All right, but first and foremost, we need to check. We need to carry out a check between two impulses right here. This impulse and this move down. We need to check from the divergence, what story are they telling us? And you can see clearly, it makes a lower low here. And right here, guys, we have a lower low. That means the last push to the downside is more powerful than the previous push. Okay? And if that is the case, it means that we are not going to expect this move to the upside here. Rather, we are going to expect the last push to the downside to encounter a retracement of 50 to 61.8, and we have another push to the downside. Look at it, and I'll take my fib, all right, and I'll look at the nature of the corrective structure that is going to form here, and don't be surprised, you already see an element of an impulsive move right here. So if that is the case, the possibility of seeing a zigzag corrective structure is there. So I'll be projecting an impulse, corrective structure, and another impulse, and then a move down, because we have tested the momentum of the last push to the downside, the previous two pushes to the downside, and the last push has a greater momentum as indicated by our indicator here. From this level here to this level is lower low, no divergence between them. So that's why we're expecting a corrective structure for more downside. And most likely, if this plays out as we have anticipated, for those that trade trend line, you're going to have it this way. You know, I give you raw, guys. If you are trading trend line, I will give you reason why the market is touching your trend line. I will give you. Okay, it's just a simple reason. And then if you have it this way, there's one test you still have to carry out for me. All right, and the test is simple. This is the last lower high. This is the next lower high. You need to plug in your stochastic and check the possibility of you having a bearish hidden divergence. Okay, if this is lower, this level is lower than this level, then we expect that on the stochastic, the stochastic that corresponds to this level should be lower than this one, but you discover that it will be higher than this one. That means that you are giving a better premium price to sell. That's what it means. Look at the corresponding level on the stochastic here. Okay, if this one come down, go up, come down, go up, and come up over like this before it come down, look at it. It's going to make a higher high, and it's going to make a lower high. That confirms the authenticity of the fall at this level. And if God helping us, we now see bearish engulfing. I don't even wait for correction. I don't wait for anything. I pull the trigger because all confluences are coming together. Put my stop loss above, and that's all, guys. So that is it about Euro JPY. Okay, Euro JPY. The next thing is what's this pair called? Euro GBP. Okay, Euro GBP is not ready at all. We want a corrective structure before any drop. So just wait it, leave it, wait for it. It's not ready. You see, I was thinking that this pair is giving us a triangle. I was looking at a triangle before. Okay, a kind of open-end triangle, because you see that after this move to the upside, you see what A, B, C, D, E, then you expect this. All right, this is what I was expecting, but there's going to be one confirmation for this structure. That is why patience is key. You have to be patient in this market. And the single confirmation that we are going to see is that if the impulsive leg here is almost equivalent to this high or even breaks it, fine. We know that we are going to look for what? A corrective structure. And as soon as we get this corrective structure, guys, this move to the upside is inevitable. Is inevitable. And the length of that move is going to be an extension of this particular wave here. Drop it here, take it back. So the TP of that move is going to be here. It's as simple as that. That's what we have. But there are many people who are not patient enough to wait for this leg to form. It is important for you to wait for a confirmation leg. This is a confirmation leg. If this leg, first impulse, form, and this corrective structure, you are able to define it up to 50 to 61.8. This one will come, guys, and that is your trade. Do you understand? Or it means that all this move is just an impulse. All this move here is a correction that you are not concerned about. This is your main move. You can see all the waiting right from here down here, and this is where you are just going to take your money. Do you understand now, guys? So that's how to look at the market that way. All right, another trade setup we are going to get is GBP AUD, guys. We are looking forward to getting this GBP AUD. And what is the focus that we have on GBP AUD right from time? Okay, what is the focus we have on it right from time? If you look at it on weekly, okay, if you look at it on weekly, you see that, let me delete some drawing. Okay, you see that after this drop, guys, what do you have? This drop, you have correction to 50 to 61.8, finish. You have this drop, you have correction to 50 to 61.8. You have this drop. Have you had the correction to 50 to 61.8 before the drop? No, you have not. So based on that, we are now anticipating an upside move for GBP AUD. Okay, but then I want you to look at something, guys. Just check something. In making that upside move, is developing a structure from the beginning. 1, 2, 3, W, 1, 2, 3, X. We need 1, 2, and 3, Y. Okay? And by the time this pair gets to this level, it will pick liquidity from this supply, and it will have effectively made 50 to 61.8% retracement of this move to the downside. Okay, this move to the downside. Can you see? This is exactly at 61.8% retracement of that move. And then from there, we look for opportunity to the downside. Is that okay? It's going to be a crazy sell of GBP AUD to the downside. Is that okay now? So now, so where are we right now? What opportunity can we get in this market? You see the push? I gave everybody this trade last week at this level, 1.7365. That was the level I gave the trade. Can you see where it is now? From 7365, that's about 200 pips. 200 pips to the upside. Okay, but now since it has moved to the upside, what do we want? We want a corrective structure. Give us a fine corrective structure here, and then we have another move to the upside. What I'm thinking is going to happen for this pair is that you are going to have a kind of structure where you have a 3-wave move to the upside, 3-wave back, and then 3-wave move to complete the structure. That's WXY. Okay, that's what we are going to have, because if we are just going to have a simple 3-wave structure like this here, then this wave should have pushed up higher. This particular one should have pushed up higher like this for me. But since it's stopping here, then the equal leg of this one is going to end here, and that will now have completed this structure here. So that means what we are going to have is logically you are going to have a pullback here and a move to the upside to complete the structure. Can you see? This is how you logically look at the market, guys. At times you'll be right, most time you'll be right, and then sometimes you will be wrong. And that is why it is very, very important for you to minimize your risk, so that when you are losing, you look just small. And when you are winning, you win big. Is that okay now? So next, GBP card. All right. This pair is just failing to drop. It's failing to drop. What I see in GBP card is that I'm taking this to be running flat. Okay. And I'm taking this to be an impulse of the continuation move to the downside. And then if this is an impulse of continuation move to the downside, then all we need to do now is to take a fib of this impulse to this level. And right now, guys, we see we pin 61.8% retracement. So that is it here, guys. And if that place is a 61.8% retracement, I also have to measure that if we're having a lower high, then it should reflect on the indicator. It should reflect on the indicator. If this is a lower high, guys, it should reflect on the indicator by a confirmation with a bearish hidden divergence. You see the top here, you see the top here. You see the top here, you see the top here. Can you see? Equal high on the indicator, but lower high on what? On the price. We are supposed to see lower high here, but we are seeing equal high, meaning this level is good for sell. Do you understand now? It's good for sell. So if that is the case, I go to lower time frame and see if I can see what is called originating impulse. Okay, and here I'm taking this three-wave structure as an originating impulse to the downside. And then if I take a fib of this three-wave to the downside, I'm seeing a clean 50% retracement and rejection, and I want this to push to the downside. This is why we are currently trading GBP card in our signal channel. All right, in my signal channel, we are trading GBP card to the downside. We enter right at 70 something, about 73 or so. Okay, at this level, now we are pushing down. This is a corrective structure. Okay, a zigzag corrective structure that have come to 78 and is going to push down from here. At least, if I cannot guarantee anything, this market should be able to give me equal leg of this three-wave structure. Okay, it should give me to this level, guys. I want to see it hitting this level. Minimally, I want to see it hitting 55.50, 55.50, 100 pips drop to the downside. If you are here, you are not in my signal channel. If you want to take the sell, you can take it. The only thing is that if I decide to bail out, I may not communicate to you. I only communicate it in my signal channel. All right. So let's move on. That is a GBP card. And somebody will ask, why are we selling? Why are we selling? Look at it from the weekly time frame. Look at it from the weekly time frame. It's still bearish because I'm taking this as a corrective structure. This as a corrective structure. Okay, for this impulse. This impulse here is being corrected. And don't you think we should have more move to the downside? Yes. Okay, and when that is done, you see this move to the upside? It will be replicated here. You have another move here. And the three now form a corrective structure, form of A, B, and C. And then after that, this move to the downside, you now have it as a move to the downside here. Simple, guys. Move to the downside here. That's all. This is how we forecast with ELLIOTT wave theory. What will happen in 5-6 years to come. On GBP card, I have already given the forecast to you. And then what we are looking forward to now is to continue to sell GBP card until we get to this level. Is that okay now? All right. So let's move. Let's move to our next pair, guys. GBP USD. Okay, GBP USD, you look at it with other major pair. You know, right from when this pair was here, and I saw many people calling for sell of GBP USD, I was laughing. and said, GBP USD cannot sell here. And if I'm going to sell, if people are selling, I'm not going to sell. I would rather wait, let the sell finish, break this low, then I buy to this place. Because if GBP USD does not break this level, guys, it's not going to find a comfortable level to sell. It's not going to get adequate supply that will push it down to the downside. So people that call for sell here at this level, they have little or no knowledge about market structure. Okay, it means that their system is just giving them a narrow outlook of the market, and you cannot profit from this market until you have a general and broader outlook of what market is saying. Okay, so the knowledge I have applied at this level to tell you to forget about the sell and concentrate on the buy is liquidity. It's liquidity. This particular pair is bearish on the higher time frame. Okay, so you must see a comfortable structure that that takes liquidity from lower time frame for you to be able to have a comfortable sell to the downside. So the question is this: which investor in any part of the world will be comfortable in selling this pair when there is opportunity for you to come to this level? No way. So we would like to see a situation where this pair now will give us this structure 1, 2, and 3. Corrective structure here. After this 1, 2, and 3, corrective structure here. Another 1, 2, and 3. That time it has broken this level. Liquidity taking, smashed to the downside. That is how you look at the market, guys. That is why you see me for quite some times now. I've not traded GBP USD because honestly, there is no need to go there. There is no need. Do you understand? Because we want to concentrate on the sell. We want the sell. We don't want the buy. Do you get me now, guys? If I have to buy this pair right now, I must understand the structure that is giving me. If it's giving me 1, 2, 3, I know this 3 waves is complete. If it's giving me another one that comes to this level, guys, I can call for buy because this is a comfortable demand level to push this pair to the upside to get equal length of these first 3 waves. Equal length here. Simple. Do you get it now? So in that case, if you take a fib extension of this level, you discover that you are having it right on this box, guys, right here. Boom, comfortable sell, level for GBP USD. So guys, go and teach them outside. Apply Elliott wave theory, demand and supply, liquidity. These are the 3 concepts I put together, guys, to give you cracking analysis in this channel. Just follow it. Okay, very soon I'm going to get to producing content on liquidity for you so that you have a balanced view of the market. And then, of course, I have been teaching you fundamental analysis. You cannot see alignment of technical and fundamental analysis. You will see it yourself. It's very clear. Do you understand now, guys? Let's move to the next pair. USD card. I'm expecting a buy opportunity on USD card. But why I have not called the buy is because USD is still temporarily very weak right now because the correction on DXY is not over. This is how I use DXY to time my trade, to time my entry. Some people are already buying USD card, but I say no. Where is the strength on USD that is going to propel me to the upside? I have great mentors, great traders who had called a buy here. Why? Because they trade just Elliott wave theory. They have not understood this liquidity. Because of that, they are calling this because what are they saying? They are saying that, oh, because we have this level broken, liquidity taken. No. You have to time your trade with DXY because this is the sole determinant of volume in the market. So we want this guy to come down. When this guy is coming down, there's possibility that USD card is also going to come down to come and break this low again. And that's what I'm looking for. Break this low again, form this ending structure here, come to your indicator, and you see a perfect divergence. Guys, let me show you. Can you see? Oh, no way. Hold on. I'm going to show you now, guys. This thing is real. The theories are real. The application is very, very nice, guys. Just give me a second. My indicator, I have to arrange them. Just give me a second, guys. Sorry. Give me a second. Okay. I'm going to show you right here, guys. I'm expecting USD CAD to come down to break this low. Okay. And after it has done that for me, guys, it's going to form this ending structure. Okay. And if you look at your indicator, you will see a perfect divergence. Can you see? The market is making a lower low here, but what is the indicator doing? It's making a higher low. That is a divergence. But now, our problem now is entry. How do we get entry? Now we have gotten the structure. The structure is right. Okay. Now we need an entry. And if you look at it, you see an impulse. Let me show you something. Wait. Let me show you something, guys. You see this impulse? You see 1, 2, 3. Okay. You see 1, you see 2, you see 3, you see 1, you see 2, you see 1, 2, 3, 4, and 5. Who has understood what I'm doing, guys? This is a WXY structure with the Y structure carrying a what? A diagonal at the end. Let me label it. Oh God, this is W, this is X, this is Y. Okay, and then this is A, B, and C. This is A, B, and C, and this is A. This is 3 waves up. 1, 2, 3. That is B, and then where is C, guys? 1, 2, 3, 4, 5. And I told you when I was teaching you a diagonal that an ending diagonal can be in wave 5 of an impulse, and it can also be a wave C of a correction. That is the practical application you are seeing here. So I want this guy to come to break this level, and I'm not going to wait for any impulse and correction before I pull the trigger from here. Oh, I'm not supposed to tell you this, guys. Oh, no. At your level, please wait for impulse and correction. Okay? But we have mastered the theory to such an extent that we may decide not to wait for an impulse in a particular setup because we know all the theoretical guidelines are fulfilled. But as far as you are concerned, when this market gets to this level, let it make an impulsive move, let it correct back to 50 to 61.8, take this trade to the upside without fear. All right? So that is, exclusive analysis of USD CAD from me. Are you taking it to the upside forever? No way. All we want is this. Watch. Just watch me do something right now. Do you see this? 1, 2, and 3. Okay? And then that 1, 2, 3, and you see the A wave here that's been corrected. And you see here, you see the C wave here. Is that okay now? Good. And then what happened? You see this move that come down here. You see it being replicated here. You see, this is what is called wave balancing, guys. Wave balancing. And then what happened? All the move that come to the upside here, it is that same move that we are looking for here. We now want the same move here, guys. We want the same move here. As soon as we get to this level, guys, expect a massive move of USD CAD to the downside. I don't know what we call it, but expect a massive move to the downside. This is what is called wave balancing. What you see here is what is being replicated here. And when you now go to that side, you now see that we have made an impulse. Then we have an expanding flat here. We have been able to define the correction, and the correction has given us about 50 to 61.8% retracement. By the time this guy comes down to break this level, it might come to 0.618, and then after 0.618, we now make a move to the upside to break this top. Is that okay now, guys? So that's exclusive analysis of USD CAD from me to you. All right. So right now in USD JPY, what I'm expecting is simple. I'm going to expect more downside, but before that downside come, there's something that's going to happen. All these waves to the downside, guys, it's an originating impulse, okay? And then you need to find the fib level to which it will correct to, okay? And because it is starting impulsively, you should expect that it's going to form a zigzag corrective structure. And if this push come to 50% retracement, let it come back to 50%. You can buy this leg to 78 and sell this leg to the downside. That is as simple as that, guys. It's as simple as that, guys. And you can see at 78% fib retracement, you can see a big supply there. Okay, why do we refer to this level as a big supply? Why do we refer here to as a big supply? It breaks market structure. Okay, it breaks market structure. That is why this qualifies as an impulse. Okay, that's going to be retraced back to what? 50 to 61.8. And this trade to the downside is going to be a cracking trade to the downside. Don't miss it, guys. So that is the analysis on USD JPY. All right. US 100, okay. I want to see something happen on US 100 because we have already seen the move complete. It's a corrective structure in the middle, and you have a move down. This is a complete three-wave structure to the downside, but we need to carry out one experiment now. Between these two impulses, which one do we have a divergence? Let's check. Between this level and this level. Let's check the indicator. Okay, at this indicator is not perfectly arranged for me. Okay, can do something now. To this level, you have this level, then you have this level. Okay, do we have a lower low? Yes, we have a lower low. So for that reason, since we have a lower low, for that reason, guys, I'm not going to look for buy opportunity on indices. Okay, so first I want to check, let's check. This look like an ending structure because as it's getting closer to the upside, it's not pushing too much like before. So let's check if there is divergence. Okay, let's check if there is divergence. We have to just wait for enough data for this pair. Yes, there is divergence. Okay, but we need to be careful. The divergence is not too much. So all we need to see is that here it will push up one more. Then let's see originating impulse first. And then we'll now see corrective structure and sell. That is how you are going to look at US 100. US oil, okay, it's still going to fall. Just wait for corrective structure. Wait for corrective structure and let it fall to this level. BTC, I wanted this BTC to really come to my fib level, but it did not touch there and it's moving up and I'm not bothered. Until it comes to that level, I will not touch it. And if it doesn't come there, I have no trade. It has to come down to this level. This is where my demand is. I buy to the upside. Is that okay now, guys? Okay, good. Okay, good. I'm looking for a sell in good. I'm not looking to buy it right now. The reason why I want to sell it is that if gold has to start buying for a long term, it has to break this level, guys. It has to break this level. This is what is called equal low liquidity. Okay, that equal low liquidity must be taken for us to have a comfortable buy to the upside. And then how do we come back there? If we have to come back there, then we have to treat the present move to the upside as a retracement. And you can see right here is right at the top. My stochastic is right at the top, meaning it's good for me to look for sell opportunity. And then right at 50, RSI right at 50, and then right at supply level. So this is going to be a perfect trade to sell. Let's go to 1 hour time frame. Okay, my signal channel, we have taken some pips. We actually had a 250 pips drop in the night, but because we slept off, it retraced on us. So we just ended up taking maybe 30 pips. That's not a problem. All we have to do now is to take a fib of this impulse that have broken market structure right here. Can you see? upside, correction, higher high, higher low, higher high, higher low, higher high. Do you see? The last low is taken. This is what we call break of internal structure. Guys, what do I call it? This is a break of internal structure. And then what do? You take a fib when you have a break of internal structure. Because the first leg is already impulsive, you have to what? Know that this is going to give you a what? A what? A zigzag. So expect it to form an equal leg. Okay, so where is the equal leg, guys? That is what we take preeminence over fib retracement. So equal leg is coming to this level. Drop it here, put it down here. We are coming to, can you see the confluence is there? 78% fib retracement and extension of 100 to 123% is aligned perfectly at the same spot. So I can guarantee you that if this market get to 1777, 1777 or 1775, I'm going to sell it to the downside. And if I can say engulfing in 1 hour time frame, that is even a better opportunity for me to sell it off to the downside. So this is a good setup, guys. Put eye on this. I'm going to get this move to the downside. Okay, it's as simple as that, guy. And you can see this fine drop. I caught this fine drop yesterday in my signal channel. We caught it right from here. I said, sell it. And we caught it, and we got it from here to here, about 250 pips. Can you see? This is 225, but when I measure it was 250 pips. Only that I can't get the exact entry point here. But before we woke up, it retraced on us. That's not a problem. We are still going to catch 500 pips on this good, guys. So that is my training for today. I believe we enjoy the training. I feel just very comfortable, very happy to analyze this market, because it has taken me a long time for me to study and master the theoretical guidelines, and it's working so perfectly fine. So if you are interested in joining my mentorship program, it is available, just $500 US. I will mentor you from scratch to finish until you are profitable. I won't leave you. All right, that's the rule, except you are not serious. If you are not serious, I'm going to leave you and give you your money back. Get out. But if you are serious, I'll make sure that you are profitable. And if I have new development in trading world, I carry you along. Okay, the essence, people don't know what is called mentorship. Some people who are wise, every money they have that they are supposed to use to trade, they pay it as mentorship fee. When they pay it, they now start learning what will liberate them from financial stress forever. So what they follow. Even in that period, they will be trading a demo account. And once they get it right, boom, they now look for money, open a small saving account and grow it. But people don't know. They don't know this. What they think they should do is that if they have $200, let them deposit it in the life account. They blow it. You have not equipped yourself with the requisite knowledge for you to make it in this business. And then you just want to start, boom. It's not done that way. You spend 7 years in the university to study medicine. All right. You spend 5 years in the university to study engineering. And when you still finish, you don't know anything. You still have to go and learn practical. And then you want to come and learn trading yourself, or learn trading free of charge that will give you so much money that you rule this world like glue. No, it's not going to work. It can't work. It's not easy. You need somebody to hold you by hand and say, no, it is not so. This is not the correct way. This is the correct way. And then as you begin to understand your correction, you begin to make mistakes day by day. And because of your easy accessibility to the mentor, as you are making the mistake day by day, is correcting you every day, every now and then. And as you are refusing to repeat those corrections, the more you are getting better and better and better until you become a master, until it becomes a skill that cannot leave you. I can tell you that right now I have about 63 videos on my YouTube channel. I did not consult any book to write a script for any of those videos. Those are the things I know. Those are the things I do every day. In fact, there are some of them, there are some things there that you will never see it in any book. You will never see it on any newspaper. You never see it on any forest book. You never see it on YouTube. It's a creation. It's my own creation, my own original script, original work. And it is all from some years of thorough hard work and research. So if you want to join mentorship group, you are allowed. It is a one-on-one training. I don't make my mentorship group as a group work. No. No two of my mentors know themselves. No. My mentee. No two of my mentee know themselves. No. Because it is a one-on-one training. The reason why I have to design it that way is that the speed of learning, the speed of comprehension of individual differ. So if I put them together, one may be getting it, one may be lacking behind. So at the end of the day, I'm going to achieve result in one and achieve failure in the other. And in mentorship program, it is compulsory that your mentee know trade like you, see the market like the way you see the market. If your mentee has not started to see the market the way you see it, he has not started. So that's what I want you guys to know. That's what I want you to do. So if I'm telling you to go and pay for mentorship, I know what I'm saying. Because if you don't pay for mentorship, no free content can deliver you. Because there's nobody that will put free content on internet that will not have something to hide and reserve for mentorship program. I am telling you the secret today. So take that secret from me. And I think the secret has blessed you today. All right. So if you feel that you are also trying, only that you are not consistent, okay, you feel free. You can join my what do you call it? My Signal channel. Although I'm not in charge of that channel, you can contact Faithy. You can see the Signal channel right here. Right here. You can see we are always closing in the blue. I believe you are seeing the screen share. Yes. Okay, you see it. You see it. You see every time we are already pushing. We are pushing. You see we are pushing. Close gold. We should have made 260 pips. We'll close it small. Can you see? You see, guys, close AUD USD 7 pips. Yes, we don't want the trade again. That's why we close it. Okay, you see, close GBP CHF position, 32nd position, 30 pips profit. You see it, guys. You see, close first position of GBP CHF, 30 pips. Yes, you see it. All right, you see it here. That's the Signal channel, guys. That's the Signal channel here, guys. All right. So you can see, so that's how it is. At least we have had like 4 or 5 trades this week, or 5 or 6 trades this week. We have not lost. We have not lost a single trade. We are pushing, guys. That is the condition I want. Don't want a station where I record loss on anybody's account. Okay, so we are pushing. So that's it, guys. I don't know if anybody has any question. Somebody say, how much is the mentorship program? For now, my mentorship program is just $500 US. Okay, it's just $500 US. That's my mentorship program. Okay, that's my mentorship program. Okay, very soon I'm going to increase it to $1,000 because the content, the way I structure the content, the way I teach with passion in mentorship class is different. The vibe is different because oh my God, it's different because you know, it's just different. The atmosphere is different. You understand? So I look at it that the content I put forward for mentorship program, it worth $5,000 US. But if I say I'm going to put it down $5,000, many guys may not be able to afford it. That's why I just, you know, pipe low, put it $500. Another question? All right. Do we have another question?
Hi, Mr. Net. Thanks for the value.
Yeah.
Regarding NFP on Friday, I'm
Okay.
assuming that your overall trade for NFP is sell gold, right? Based on your analysis.
Okay.
I'm asking you a question. If based on your analysis, like what's on your chart currently is that gold will be selling on Friday.
Gold would, okay, based on my analysis, that gold will be selling on Friday, right?
Yes, yes.
Oh,
I mean,
okay.
am I correct?
Okay, so now let me come in. You can mute yourself now. All
Okay,
right,
cool.
so now let me tell you something about fundamental analysis, especially news release. I am a trained economist. All right. I know the implication of fundamental news release, but I will shock you to let you know today that I don't trade news release. No for me, capital no for me. What I do rather, and that is what every professional trader all over the world, that's what they do. It's amateur that say they want to trade news. They risk all their money on news because they say they are sure of a direction. Who to tell you that you are sure of a certain direction? So what I do is that, assuming, let's use this gold as an example. Assuming I have gold structure like this, and I'm expecting this gold to what? To move to the downside. Is that okay? So I wait for NFP. When NFP comes, it is either gold will move to the downside or it's move to the upside. So what I do is that if gold move to the upside, it means that it has given me a better price to look for sell opportunity to the downside. Do you get? Then if gold now move to the downside, then I know the NFP has helped me to create impulsive move that I will be looking for the corrective structure, maybe the next day, to now trade the push to the downside. So you now discover that people that traded the sell and put stop loss here, the market is still going to come back to their entry, where we will now take the sell in peace. And when this sell was coming, and they say, hey, we are right, NFP is pushing down, gold is pushing down. By the time this gold is now correcting to the upside, they now have psychological pain written all over them. Why? Because their profit is wiped off. So in order to avoid psychological pain, all right, you've got to wait. You've got to wait. Let NFP help you to create structure. News release help me to create structure. All right? And now look at that structure and see how I can position myself in alignment with the structure I had in mind before to take an opportunity either to the downside or to the upside. So if NFP come, I check my gold and my gold is moving to the upside, I know that it's possible you have this move more upside and then down. I will now be following it that way. And if NFP come and drop this gold for me, fine, correct for me, and then I push down. Simple. I'm not looking to trade the impulsive leg that will be created by news. I'm not bothered with that because every impulse must be matched with a corrective structure. And in as much as you are able to read this corrective structure perfectly, be sure that you are guaranteed that 80 to 90% of the time, you are going to get the next continuation impulsive leg to the downside or to the upside. You're going to get it. Do you understand what I'm saying now? Do you understand it?
Yes. Well understood.
Yes, Mr.
Correct.
Yes, Mr. Net. Makes much sense.
Correct.
Thank you.
Correct. So don't trade news. I beg you, in the name of God, don't trade news. Wait for news to create structure. News will either help you to complete the structure or news will help you to create the structure. So news has two distinct functions to a professional trader. Two distinct functions to a professional trader. Number one, news can help you to create a structure. Number two, news can help you to complete a structure. Let me tell you something. Watch something. If news come and give you a push here, what does it help you to do? It has helped you to what? To do what? Somebody is sleeping. Somebody should unmute himself and tell me. I said 2 functions of news. News can help you to complete structure, and it can help you to what? To create structure. If you make an impulsive move here, it's helping you to create structure for more downside. Okay? If it's making a further move to the upside here, it's helping you to complete the structure that will make you to sell.
Okay.
So you need to wait. Let it see every time that there is news release, that move you are seeing from the news release is not a waste to a professional trader. It's helping a professional trader to decide the next line of action, because the fundamental news release has come, and then investors now have a certain bias on the market based on the fundamentals. So you allow the fundamental to play out. When the market has not calmed down and relaxed, that is when professional traders come in. They are not coming in at the point of news release. The news that is going to be released that even the president of the United States is not aware. I'm not sure if you people know how secretive they treat NFP report. The president of the United States is not aware of it until it is released. Otherwise, there will be an executive interference in it. Don't you think every good report help a political party to win election? I don't think don't you think if a negative report is going to be released and the president is aware, he might obstruct it, he might find a way, to adulterate it. Don't say developed world are clean and pure. If they are clean and pure, the word corruption is not in my dialect. The word corruption is English. That means that corruption was existing in the United Kingdom before they colonized my country, Nigeria. The word embezzlement is not in my dialect. The word embezzlement is English. And that means that embezzlement was existing in the United Kingdom before they even colonized America. So what are we talking? No country is clean and pure. Even my country, that is one of the most corrupt countries in the world, they moved the money to America, to Britain, to all these countries, and they collected it from them, knowing fully that it's a corrupted money. So no country is pure. So because of that, Federal Bureau of Statistics don't relate this information to the executive because it can be corrupted along the line. And this news report is very important because it helps investors to make, a definitive action about their investment. Do you understand? So that is how it is. So allow news to be released. Allow market to do whatever I want to do. You now define what was your bias. Has this new help us to complete our structure, or has it help us to what? To create a new structure? From there, you pick it up. Okay, these are some of the things that I teach in my mentorship class, but because you have asked this question and because of some of you have had cause to attend this program, that's why I'm giving you free of charge. One more thing before we go. Finally, we have to check something before we go. Finally, on this gold, you see this push, you see impulse, you see this push, you see this correction. Okay. Let's check. I don't know if we have checked it before. Let's check this push and this push. Let's check it on the indicator and see whether it's lower low or there is divergence. Okay. Here, lower low. Let's check if there is divergence from here to here. Yes. There's no divergence. So no doubt with this, I'm very convinced that this move to the downside will come. This move to the downside will come. Because supposing there is divergence there, it means that momentum to the downside in this particular wave is very low compared to this. And that means that this wave is going to the upside, and this will have finished the corrective structure. Corrective structure, you have this move to the right. But because this push and this push, when I compare them with the indicator, all right, I discovered that this push is pushing harder than this one. That's what it means by that lower low. Okay, there's convergence of price at the expense of the expected divergence we are expecting to take a move to the upside. There's convergence. So because there is convergence of price and indicator, we know that everything that is happening here, right here, is just a corrective structure. And don't be surprised to also have this alternative, guys. Don't be surprised to have this 3-wave structure to the upside. You can have a 3 waves. If you are getting too much correction here, just know that you are going to have a corrective structure in WXY format. You see 1, 2, and 3, 1, 2, and 3, then 1, 2, and 3. Okay, and from there you have to move to the downside. This will be the best thing to happen as far as I'm concerned. That will be the best thing to happen because it's going to push down harder than we expect. Is that okay now? All right, another question? No. All right, so
Hello,
any other question?
Mr.
Thank
Dan.
you.
yes.
Thank you.
Sorry, it's not really a question anyway.
Okay.
It's just appreciation to just what you taught us now. Sincerely,
Okay.
I really appreciate it.
Okay.
Though facially you don't know me, but I know you. No, I don't want to mention the place because we are on in a group meeting.
Okay.
Concerning what you said about the mentorship class, I will chat you personally on that.
Okay.
Yes. Then I also want to say something.
Okay.
Your response to students is very amazing, sincerely. I've seen so many mentors and I've chatted with so many of them. Some of them feel so big to the extent that they don't respond as at when due. But you, except you are not with the phone, and
Yes,
without knowing the person, you respond. And sincerely, kudos to you, and I really appreciate that.
Thanks.
I've been in Forex for the past 5 years now.
Correct.
I left my job because of Forex. I'm into real estate. And I face Forex squarely. And I have some students I'm training. I have my own students, a lot of them. But when it comes to WIF, sincerely, I have to give it to you 100%.
Thank you.
Because the way you break it down one by one, and I feel like, no, let me give it to my Oga.
Thank you.
You are week 11. You are week 11, isn't it?
Yeah.
You know what I mean by week 11? You are
I don't
week 11.
I don't know the meaning of week 11. No.
You should know the code now. Pips Arcade.
Okay.
Yes. And my own is week 77.
Oh, that's good.
So when you came to the office, I was working there, but you didn't know. I was just, like a spy. I was just monitoring, seeing everything. Wow. And lo and behold, I will just chat with you personally so that you know my identity more.
Okay. All right. Thank you.
Thank you so much.
Thank you.
Yes, sir.
Thank you. Another person with another question? All right. We have really spent time. Okay, so let's call it a day, guys. So I'm going to make the video available on YouTube. You can go there and watch it again. If you have not subscribed to the channel, please do. And don't just watch. Click the like so that YouTube can spread the message to many other people. All right. So thank you very much, guys.
Do you still have time?
Yeah.
Do you still have time?
Bye.
Hello, Mr. Net.
Yes.
Do you still have time? I wanted you to look at Zoom, like Zoom stock. Like I'm anticipating a very strong bullish move. What is
the symbol
just
for
Zoom there?
Zoom.
I forgot the name.
Hey,
type Zoom.
Zoom.
Yeah, wait. Then it should be under Nasdaq. Stock Nasdaq.
No, don't worry. Anything to bring it. I'm under all. Where is it here?
Okay, it's ZM. The one ZM. Zoom Video
USD?
Communication Incorporated.
Is it ZM
No.
USD?
No, Mr. Net. Listen. Yeah, the one you're highlighting. Click on there. Yeah, that's the market. Thank you. I'm anticipating a long-term buy.
Okay.
I'm anticipating a long. Take it from weekly, please.
Okay.
Thank you.
We are not having enough data on this thing, because
but
they are not giving us enough data. We are still supposed to see some chart over here. We are not seeing enough data, but I'll try my best.
Zoom is just an imaging company. It has not been there for years. It is just probably yes. But if you can see, this looks like a correcting the upper the previous impulse.
Yes.
I'm assuming that chances are it will retest maybe the low and buy again or at the 886.
You know what you're going to do?
There's also a harmonic bet. Here. The thing is that I'm only accessing this through my phone. I'm not using my laptop. If I was using my laptop, I would have
been able to just hold on.
Then my market.
Just hold on. You see this? It's a strong move.
No, sorry. I'm listening. The thing is, I'm at work and I'm just stealing my work time
Just
to
hold on.
attend
Just
this.
hold on. Let me analyze it. You see this?
Okay, cool.
A strong push to the upside. You see this?
Impulse.
A strong correction to the upside. You cannot tell me that in this structure, in the cell structure, that you can identify a clear corrective wave. You can't tell me you can identify a clear corrective wave. So this is a clear case of impulse situation. This is a clear case of impulse situation. And anytime you have impulse situation, there will be a time that it will now give you a distinct three-wave corrective structure. Do you get now? So now remember, this is weekly. You have impulse. So it is possible that here you now have three waves. And in that case, it means that this leg to the downside has been corrected by this retracement. And in that case, what you are going to see is continuation to the downside here. Do you get? You see, this is how you look at the market, because we are seeing an impulse scenario.
Yes, that's
so
very true,
at any rate,
just
hold on. At any rate, what you should be expecting now is not a sell, certainly. Let me clear all. I'm going to clear all. I'll give you my expert opinion concerning this. If you look at this stuff, you will see that, okay, this thing cannot, the normal fib cannot work well here. I can see that 78 is supposed to come to this level, guys. But look at where it's stopping. All right. So that is the problem when you are looking at stock and other things. Our normal fib don't work there. I've noticed that. Okay. So our 78 has come here. So if that is the case, if it were me that want to trade it, okay, what I will do is that I will be assuming that this PS will give me a corrective structure up here. If the corrective structure up here is a three-wave corrective structure, then I know this wave to the downside is coming. Then if it's just a single wave here that come, then I know that I'm going to have corrective structure here and upside is coming. Can you get the logic? But at any rate and in any way you look at it, this wave to the upside will come. So since you have noted that in weekly, just go to 4 hours and see the structure that you are having. That's how I look at the market. And if the structure you are having is in line with your line of reasoning, then you know that it's going to happen that way. So what I will do right now is simple. This is already, look at here, a move down, a correction, a move down, a correction. Right now, we have not taken this top. Okay, we have not taken this top. Okay, so what I want you to do is simple, and if you hit to that advice, it's going to pay you. This is a corrective structure. Whatever that will happen here, allow one leg to come. Allow one leg to come. Let one leg come. This one leg that comes is a proof, is the one that eventually breaks the internal structure. And that is a proof, a confirmation of upside. And this is the leg you are going to take a fib off. Okay, you now look for correction back to 50 to 61.8. And exactly at this level, you are going to look for what? A move to the upside.
To the upside.
Yes. Can you see? This is how you do it. And in every 10 trade you take, you will win 8. This is how you now develop patience. Look at confluences. Can you see? Boom, to the upside. Where are you going to take your profit? Watch that weekly. Go and take the fib and check 50% of that fib. That is the area you take your profit. Depending on the structure, how the structure develop on its way to that place. You can see that it's 1, 2, 3, W, 1, 2, 3, X, 1, 2, 3, Y. It can give you this structure as WXY structure correction. And from there, you have to move to the downside. You look for You now wait the way you are waiting here for the structure to develop. And in demand and supply trading, they call it accumulation. Okay, this is accumulation. Allow this accumulation to finish. You don't trade in between this box because that is in the territory of a retail trader. You don't trade there. You'll allow a market to break out of the box and give you a confirmation of the move. That is what differentiates between a professional trader and an amateur trader. A professional trader don't want to get involved here. He wants a break upside. He wants a fine correction that he can define and understand before he take a move to the upside. But the retail trader is already getting involved here. He's getting frustrated. Every confirmed trader, every move they are taking is happening that day. He doesn't sleep there without a good profit. That's how you know a profitable and a professional trader. So you are going to read the kind of corrective structure that developed here for you to know how you are going to take a move to the upside. So like in this case now, you can look for a fib extension of this leg. If it's come to here, you now look at it, it's here. So if you get it here and it's not up to the required retracement, it means that it suggests to you that another retracement is coming like this for you to have a push upside finally to get to your level. Do you understand now? So that's how I want to look at Zoom. Forget that.
Thank you.
Don't forget that
thank you.
Everything that I've told you is based on the technical that I'm seeing. But I love to do my technical with my fundamental because it is the fundamental that is driving the market. Unfortunately, I don't know the fundamental that drives Zoom. Otherwise, I will be able to pinpoint exactly why Zoom must go up at this point in time. I will be able to say, for instance, at this level now, I believe this is 2019. I think we had 2020, we had COVID. That was why we have this massive move in Zoom. All right? Because during COVID, everybody was using online platform for meeting, for church program, for mosque program, and all those things. And Zoom prices was skyrocketing. And it was like Zoom was praying for COVID not to end, for pandemic not to end, because they were making money. But nothing goes up forever. After COVID, you can see the retracement. You retrace all the profit back. Okay? And then, but don't worry, boom, Zoom is still going to make it to the upside again after all the correction. And then don't also be surprised that this level may be the last correction for Zoom. And then if you buy it here, you may as well just bought it for long term. Might be there for what? For long term. Maybe sooner or later we'll get involved in stock trading. But do more brokers offer this? Is there any broker that offer this?
Yes, normal brokers do. Okay, in South Africa, normal brokers do offer like stocks like Zoom, and some other America's companies do offer this. Can you please make an in-depth analysis on Zoom? Then probably next week Wednesday share it on the group. But then much appreciated.
No problem.
Much appreciated for the insights.
No problem. When we meet next week Wednesday, I will do it. All right. Maybe I will do some fundamental before that time. All right.
Okay.
So,
no worries. Cheers.
Bye-bye, everybody. Bye.